Welcome back to Data Dash, everyone. My name is Paul Sampson, coming to you live on this beautiful Friday, October the 24th of 2025. And we just had some CPI data come out today that was pretty bullish, or at least came in a little bit under what was expected. Usually that leads to more upside. And we did see actually all-time highs get breached out of the traditional stock market, the indices, S&P 500, NASDAQ, and I believe the Dow Jones is pressing up into new highs as well. The only thing that got a little pullback was Bitcoin. However, we're going to cover that today, right? So this is actually one of my favorite setups, a little short-term move. Traditionally on CPI days, I don't know what it is about CPI, but on Bitcoin and CPI days, I always say they're notorious for essentially you get the Darth Vader or the Darth Maul lightsaber at times where it just looks like a wick up and a wick down. Basically, what we do is we take the previous session highs and lows, known as the London session, right before New York opens, and it's pretty much spot on most of the time. So we'll take a look at that. It's already played out to pretty much at this point as far as the short move for the day. Let me welcome in some folks here. It's kind of taking it easy as we finish up our week here. Make sure you guys got your pumpkin spiced coffees, of course. I chose iced today instead of hot. And let's pull up the chat here somewhere. All right, my friend Roy, how you doing? TV, welcome in. T-Bone, what up, my friend? At 11 a.m., I get graced with the presence of the king. Albert, hello. Gear, Ando Pancho, the people's champ. Paul Wall, baby. We're Pauling. We're going Pauls to the walls in here. You know, recently I've been going on with Paul Barron a lot, and it's Paul and Paul action, and I just so much want to make all these Paul puns. I went to a casino a few months ago, and this guy that was dealing me out was named Paul, and he just had the best puns ever. I almost just want to make a few shirts with him on it, but Paul's to the walls really stuck. See if it sticks with you guys too here. All right, we got some Otter gangs in here. Welcome in. Awesome. So yeah, we're just gonna, again, if anybody has any any requests, essentially throw them in here at the quarterly open, and I'll do my best, of course, to look. I do want to take a look at Bitcoin here and probably the S&P 500, NASDAQ. I'm not going to like overly analyze them. Just going to take a peek at how they're performing as far as pushing up into new highs again. Looks like gold is sitting at 4,100. A couple things like that. So, but of course, if there's any fun requests, we'll jump into that too. My friend Bruce, how's it going? Great stuff. Easy. T-Bone says he's got an easy day at work. Nice for join. Perfect, man. Good to have you. Be careful with the Pauling puns today. Yeah, we're Pauling on a budget half the time, you know. All right, so I'm going to break down this little move here. This is not like the craziest thing by any means, but again, one of my favorite setups. I mean, it's just one of the best. Just short term, of course. This is not like a crazy move. It's like 2%, so nothing to go too wild about. But as far as having like a clear short-term move where you have a clear invalidation, if you were looking to take a little short-term trade on this, essentially you had a nice stop loss above the high, and there was reasoning behind why you got this little pullback, right? So aside from the CPI information, I bring that up because more than anything, it's usually just like the opposite. CPI comes out positive really quickly. You get this really big pop. And there's a technical setup behind that, but then you come back down and then you just literally give it all up. So anybody that was looking at like breakout trading today or anything like that, looking to enter long on that break, assuming that the CPI would push us up, just, got wrecked on the short term here. Again, this is super short term, but a pretty good setup here. So, and the setup that I go by here is just looking at yesterday's range. All right. So Friday starts 8 p.m. Eastern. And last night I actually put this setup in the Discord, and basically we started the day basically right around here. So I guess right here, and we traded up to the high side of the range. All right. Nothing really crazy. At that point you could have very well come down in this area. I note that we had two daily targets basically back around this $109,000 area. And it was likely we come up and you take the high first. And the reason behind that, again, just looking at the breakdown of trading elements here, is that anybody looking at shorting that got into short positions here yesterday or whatever, again, there's just multiple millions of people trading this market each and every minute of the day. Most don't enter at the best time, right? They don't enter at the highs or the lows because their emotions run too high at those points. They usually wait for the confirmations way lower. So someone might have gotten to a short yesterday, stop loss right above the high. And that's where the idea behind that comes in, where you just come up, and a lot of people consider that like a liquidity sweep. And you take the high there. We spent a lot of time right here. All right. And overnight, essentially. And what this is now is that we came into, again, I noted in the beginning that we usually take the London session highs and lows on the CPI day, depending on which one we're near. And in this case, we came up and we had our Asia session high right here. Our London session high was literally the exact same level. And then we were spending the majority amount of time right here, which told me that most people were probably trying to take a short right here. And again, they're not taking it right at the highs. They're taking it probably in this midsection. They got a stop loss right above this region right there. You start the New York session, you come up and you take those previous two highs. Okay. And on top of that, it's our yesterday's high as well. And everybody that was trying to get this short, even here, just got stopped out. You probably had people get really excited thinking we're about to push up, enter new longs, and then only for it to wreck everybody just short term. But that's the setup at hand. I look for this setup each and every day. We take this even to the weekly, the monthly, the quarter, like all the good things there. So again, not a crazy move. I just wanted to kind of cover it, break it down, why Bitcoin saw a little bit of a pullback today, while S&P, NASDAQ, and others were breaking into new all-time highs, right? So that's just a little short-term one there. We're going to take a look at more at Bitcoin, where it's at, and what I assume we're going to see. I've been talking all week, basically, on really even probably before that, on the fact that we are most likely just going to range here. All right, we came up into some really, really big targets, big time frame, which actually, let's just peek at the stocks real quick so don't forget that. But S&P 500, whether it's on the back of the positive CPI or what, pushing up, right? So, and this is the area that we're at here for the S&P is it's all-time highs of all-time highs, right? This is honestly thinking of where we are and where we've been, and COVID lows, and before that, even these are really, really incredible levels to be reaching. It's probably not, again, at least for myself, I do anticipate this to head higher, but this is not the time personally where I'm looking to deploy fresh capital for long-term purposes at these levels, right? Because at some point we're probably going to hit a sizable high and get a pretty decent decline here. And even if we were looking to catch this move up to like 7,700, if we're going to get it, my risk management is that I'm always going to be looking for the big red day first. All right. And especially because we've had this huge move up with basically no pullbacks. And this is from our tariff war low back in April. Even if we don't get it, and that's the risk I have to take right now, right? If I'm looking at S&P and I'm like, I need to get into this, I need to, diversify a bit. I don't have anything in this, or I want to add to it. How can I get in? To me, I'm patient. I'm waiting for a pullback, if anything. There's always big red days. I think that crypto shows that to us all the time. But even in stocks, I mean, this was a pretty sizable move to the downside in 1 or 2 months. And it's completely erased at this point. And now we see a 50% increase from it, right? So 40%. So this is actually a really good example, going back to April, of what we are looking at now, right? Where we've got just all up. Maybe we push higher here. That's definitely the potential. Big target up there is about 12-15% from where we are now. So when I look at things like that, I'm like, all right, well, what is the downside potential? Even if it's still going to hold the bullish structure, like what's the risk here? And to me, it's a simple 382 retracement, at least, when you have such a strong move up like this. So at any moment, you are likely to come back down to this region, which is literally the one key level that I've had on here for such a long, basically this whole year so far. And what does that downside potential look like? It's about the same as what we're looking at to the upside. So it's not the best risk to reward in my eyes. And again, even though I do anticipate we push up, it's just there's risk here of getting the same exact move to the downside. So if I'm looking to get a new place, I'm looking for this region here back to like that 6,100 if I'm going to get it. And this was a really good example of it right here, where we had that huge move up from October 2023. And this is a bigger time frame, of course, but you get this really big pull up. Let's just see where, even just from 2023, would you come down to gold pocket and 382. And if you dragged it all the way down here, 382 retracement from 2022, you kind of get the idea here, right? So that's what I am always looking for is the retracement areas and that big red day, the big fearful move. So right now is not the ideal area to enter, is all I'm trying to get at there. But anybody that's already in and holding and looking for the next major target zones. I think 7,000 is probably where we're gonna, you know, gravitate towards here soon. Is only $200 from where we are now, but ultimately I'm looking at the $7,700 area as the next major spot where if we're going to get maybe this next major pullback, it may come from up there, right? So that's just how I'm viewing it. Otherwise, looking for that pullback before time, and that's where I'd be really interested is like 6,100. And I say really interested in the sense of, again, not looking to deploy 5 and 10 year investments right now, because I genuinely believe that we are running into a period where the markets are going to see a sizable correction in the next 12, 15, 24 months, right? Potentially. So that horizon changes my long-term view, I guess, is what I'm trying to say. So short-term in that window, I still see everything rising higher. But then I have to be aware that we're at this window of time where things are very overvalued, hitting major extremes. And so that's just kind of how I have to manage it, or how I am managing it as we get there. But same on NASDAQ here, new all-time highs, likely heading to 28,000 over time here, which is 10%. So probably in the same jaunt that the S&P makes it to like that 7,500, 7,700, we probably would see NASDAQ pushing up into that region. What else was that? The Dow Jones also pushing up very slightly, but pretty much at all-time highs here as well. I don't even have a target here for Dow Jones, but just higher. It's trading at $50,000 right now, just about, which is incredible. What were we trading at COVID lows? Like I just, this is 2020 high at 29,000. The high was at 29. The low is at 18. Okay, would you ever imagine back in that time frame, even when we were at the highs, that you would see almost 100%, you know, this is not 100% by any means, but a $20,000 jump just a few years later? That I always think of this because it's just, I don't know, I'm just weird like this, I guess. But it took us till 2020, year 2020, to get to $29,000. I mean, I can zoom this out as much as you can, but so even just from this graph, which obviously I know this has been around longer than this, but since 96, you know, so you're talking like 25 years. It took 25 years to get up to $29,000, and then it's taken us 5 years to almost double that. That's wild to like look at sometimes. Same thing with Bitcoin. I think it's crazy that even today, right, we're looking at these short-term moves where I'm like, oh, it's not that bit, you know, it's not that crazy. It's 2%, whatever. That is a crazy move in the market in general. But the crazier thing is that this was 112,000, almost a $3,000 move. All right. That from today. Yeah. So almost a $3,000 swing today, which we've been doing pretty much last few weeks. That was the entire price of Bitcoin for many, many months, if not almost a year back in 2018. And the price action didn't move at all back then. I just think that's just an interesting thing. Just a random Friday thoughts here. Right here specifically. So 2018, when we just kind of grinded it out at this like $3,000, $4,000 level, that was Bitcoin's entire price, market cap, whatever. And now we're swinging that like it's nothing every day, 2 to 3 times a day. And that's just, I don't know, that's just weird to me. Weird in a cool way, I guess. All right. So stock market is at all-time highs. Bitcoin is not. What's going on? Let me read some of these real quick. Can we look at Arrow? I'll try to keep Arrow on the list here. Like quarterly open. Oh man, I'm pretty sure T-Bone's quarterly open is exactly where we topped out right here. It is. It's an inside joke for anybody that is wondering, but when we pushed up even this week, I guess it was Monday. Again, you know, you just get $6,000 swings like it's nothing. We pushed up and topped off right at, it says monthly open, but that's because we opened October there. But obviously, Q4 opens on October too, and yeah, quarterly open holding us down on T-Bone's accord. All right, let's take a look here. What else is, before I get going, I'm going to start looking at Bitcoin here a little bit more higher time frame, but just drop in the chat, everybody. What are you guys up to today? What's new? What's your thoughts on the market? CZ's getting pardoned. We've got tariff news again every time we turn around, which it's just been the great buzzword of this entire bull run. I feel like tariffs and ETFs, kind of replaced the China bans and trying to think of what else was used to. Pretty much that was it. Back in like 2018 and 2021, that was pretty much our only buzzword. If we got China to unban something, we got a pump, and when they wanted to ban something, we got the dump. Now it's ETFs and tariffs that are the news surrounding everything. But just interested to see where you guys are today around the world. We've got 112, it looks like, people watching. So make sure you guys hit the likes for us so we share this out with others. And yeah, to just get back to it, Bitcoin, I just think we range here, folks. Been kind of the idea around here. I was looking for 130. We topped off around 126. But the idea at hand, regardless, was that we were probably going to range around for a bit here, probably as we go into next year. And the idea behind that, couple things, but just a very simple overview is just that's exactly what we've been doing this entire run up, right? So if you remember the first run back in 2023, and we essentially just ranged. I mean, this is a big range, don't get me wrong, and there's a lot of moves up and down throughout it, but ultimately this was a time when we had that initial push back up. 2023 was actually one of the most fearful times, if you recall, back then. Even with the market pushing up like that, everybody was very, very sure that 2024 was going to be a huge recession, depression, markets were going to collapse. Our high interest rates and inflation obviously have been going crazy since then. But yeah, and only to just walk into October of 2023 Q4, and it's just been up only ever since, right? But during that period, we had everybody's just arguing the whole time. We ranged to the side, pretty natural move. Every dump, everybody's calling bear market. Every pump, everybody's calling bull run. Every dump, you're back to, the emotions just go back and forth with no real strategy afoot for most, right? And then you get this push up. Now you totally forget how bearish and scary the world was back here. You get this move to the upside. Doesn't even matter what's going on. As long as price goes up, everybody's happy. You run up to another major area here. What do we do? Just kind of range to the side, slowly sideways and down, which has become the new norm. And with an asset this size, it's kind of what you want to see. We don't want to see Bitcoin at trillions of dollars slinging 50% of its market cap anymore. In theory, at least. I mean, to get a better entry, of course you would, but that's just something that as these assets evolve, I mean, that's just not what we're going to see. Even though eventually we'll get to places like, gold just lost trillions of dollars or whatever it was, maybe in a day, or the stock market does that, but it's a portion at that point. You're talking 5, 6, 8% moves, not 50, right? So when we get to these levels, everybody expects a 50% pullback because that's what we've always gotten. The same thing. We just had a nice little range here. Oddly enough, both of these showed up with some bearish harmonic setups. The exact same one, the shark, right? If you are familiar with that. And when you get that, it's just a wipeout of both highs, lows, emotional roller coaster. You slowly make it to your point over here. Again, very fearful time as we came into this window at the lows. So everything's at extremes at that point. Only a 30% pullback. So everybody expected more, of course. But the news at that point was so scary. Trade war was hitting. Yeah, it was just down only type of environment, just to get a pop up. Inauguration day comes, extremes again, super excited, only to get that pullback out of tariff woes right at the low. Tariff woes are at extremes again. And this was actually a really fast version, right, of these two, which was, at least we didn't have to wait 6 months for the resolution there. But here was the last one. And the reason I say not like last one as if it's like the only one type of thing, but we were looking for this window. All right. Set up here from that carry trade, inauguration, tariff woes, and looking to come into this window of time around 130 to 140. Even back in August, I'd noted that this was already a valid setup technically. And it came in a month before. It was a few $1,000s, a few percent before it. And then realistically, we still came up a little higher here towards the end. And if you go to the weekly time frame, you'll see that the time of this was actually right on. Right, so the timing was right here. We topped on the 6th, which to me is interesting only because of that tweet that went around, or that Reddit post, or what have you, right? And it was noting that the market was going to top on the 6th of October or something like that. So I feel like that alone is just what's going to make everybody really hold that idea that the market is topped, because again, it's 4-year cycle. That's exact timing. And this dude from the future apparently, noted it, which again, it was the time. I mean, that's literally actually the exact, this 1-to-1 comes in from not only this little setup here, but it's also the exact amount of time that we spent in the 2021 bull run. So basically projected off the low. So realistically, yes, if it was a 4-year cycle, the end of it would be here if it was going to be exactly 4 years like it was before. The only problem I have with it is that everybody's aware of that. And I don't know. It's just one of those things where if that is the high and that's the top and all that, like the majority would get it right. And I just don't get behind. I just don't think that that's usually how it plays out. But either way, neither here nor there. The technical side of things is, yes, that was a big high coming in. There was a pivotal time frame. There's definitely an area where we were going to see a reversal to some degree. So, and that's where we're at. But I'm going more so off of these right here. So this setup here is now valid here from a little lower. I just haven't changed it. But the main targets of this setup here, which is bearish as we go up, is back to our 382. So you can see here we just pulled back already. All right, wick down with our little liquidation event. And I've been holding it so far. So as long as we're holding this here, nothing really crazy. I do imagine we probably actually may see a pushback higher towards maybe around the highs of these candles here. We've got weekly NPOCs, which are volume levels left from a couple weeks back. It's also the high side of the range that we're trading in for this entire year, basically. So there's a lot of things that line up with like a pushback potentially to 120-ish. But overall, I do imagine that we make our way down to this target area here, if not this one right here. But again, I think many would probably look to this one in anticipation, which it is there. It's valid. It's the secondary target of my setup that I'm looking at. But the big one for me remains 97,000. It's high time frame average from a couple periods this year. It's just below 100K, right? So again, when you start to think of just taking all this off, when we start to think of everyone convinced that the high is in, bull market is over, I'm sure it's going to, if we make our way down to this level here, it's going to be absolutely met with some of the most fearful news going around that just makes it seem like the environment is just so bearish. Similar to each and every one when we've hit them, right? Each and every one it's been met with some big fear at the lows. And not to say that that's like a dead, the only level that's mattering and it's just got to hit that and we just bust up from there. But it's just, for me, I like to strategize these big moves ahead of time. They might not hit exactly as, anticipated, but nothing shocks me here, right? If we were to drop tomorrow to $97,000, wouldn't even tell you or have to look at what the news was, because again, there's high probabilities there for one reason. And then two, if we just look at our range again for this year, which Bitcoin just sits in a range 80, maybe even 90% of the time these days. Let's see here. Go back to here. We drag it over and all the volume for this year sitting right here. Okay. Again, we wicked down earlier. Where did we wick down on that huge liquidation day? Right to the point of control. So that's our highest volume area when you're inside the range. Natural to seek out that area there. Got the bounce. So far holding it. And a lot of times what you'll get is a bounce off the point of control, back up for a lower high. Doesn't necessarily have to go all the way back up to the range high, but that's where my idea here is. If we get some gusto above T-Bone's quarterly open there, 114, I would say we're probably going to push back up to like 120. But ultimately, whether it's from where we are now or up in that region, I think the most likely route is come down to the low of the range, which look at where we are sitting, 97,800 exactly. And that's just the key area. So we could very well get a little wick through and play around. But if we come down to this region and reclaim it, it's a big one for me. And I actually anticipate the next leg higher to come out of that to make new highs as we go into next year, which is really against most people's thoughts, right? So not married to it. If I have to adapt, if we start losing this region, of course, things can change. But that's the idea at hand at this point. All right, arrow on my list there. Now let's see here. What do we got here? Great explanation of the logic behind the short. Head and shoulders, someone says. Not sure where you're looking at that, but I'm sure there's one somewhere. All right, 150 people in here, folks. Do me a favor and hit that like if you're enjoying our Friday afternoon stream. Take a sip of your pumpkin iced coffee if you need to. Jordan says some Trump FUD has pushed it back a month or two, assuming that means the bull run high. I think the markets will sell in fear of Friday evening presser, but then bounce back off that nothing burger. Yeah. So what was it last week? Maybe 2 weeks ago, I was on here covering something. I think it was actually the day. The 2 weeks ago must have been the 10th, right? I was looking for that 119 area to hold on Bitcoin. I think we were trading right around here. But if we did not, right, it was like 113. Obviously, we took a plunge a little lower than that. But overall, that 119 was like the line in the sand up there. And then after that, those shorts that were piling in, which there were a lot, right? So even at the time I was looking at this where I was like, all right, there's a lot of shorts coming in here that you can see basically behind the scenes. And generally speaking, it's one of those times where one of two things. If you come down and we get a little push off of, a key level, that's where we can get a little short squeeze out of. But once they gain momentum and gain control at that point, that is game over in that sense, right? And that's exactly what we saw right down to that point of control. But I bring that up because on that day, it was Friday, and we were seeing obviously a big move. And a lot of times when we close the market on the end of a week, and this goes again even further, even at the end of a day, at the end of a month, quarter, when the next session opens up. So in this case, when Friday closes, and one of two things: if it's a huge pump in a Friday or a huge dump, almost always the next week is going to reverse it to some degree. And all that does is you just return to the mean, where you're going to have new averages that basically generate above or below, depending on which way the direction goes. And this was a good example here, even where you get this huge wick down. You did get a nice push back up. Obviously, it ended up kind of coming back down to it, but everything ended up opening higher on that next Monday. And then, of course, from there, you just get new information and we go from there. Somebody just texted, geez, somebody commented that something would happen tonight with one of the press releases. And then, yes, it's usually whatever occurs out of those things, especially if it's on a Friday night, and especially when the markets are closed, the traditional markets, at least, the crypto market's the only thing left open. And whatever happens on that move usually gets reversed by Monday, right? So just a tidbit there. So I say that too, because a lot of times I don't love to take new positions on Fridays, because unless I'm going to like really manage it through the weekend, because a lot of times, especially if for example, like today's move, let's get into it there. This little paintbrush is always messing up my life. So for example, today, let's just see. If I was looking for a new position today on a Friday, and let's just say it's right where we are, like we're right where we got down to today, or we're pushing up right now, and I'm anticipating higher. You can see here we technically front ran by a few $100 or a few points. And granted, this is not like end all be all levels by any means, but this one right here will definitely be something that most likely gets tagged in the next day or so. I assume in the next coming days, right? It doesn't have to be the next day or so, but this 109,400, it's front run of this level. And if I was like, all right, I'm looking at long here, for example, and this is just a total example. If we came down here today for one and be like, okay, it's like 4 p.m. on a Friday, and I'm looking to run this back up to, T-Bone's quarterly open, I have to be aware that, again, you can't like short-term stuff again, folks. This is not like buy and hold. And, if you're messing around 1 or 2%, obviously nobody really cares if you're just buying and holding in spot. But if you're looking for those short-term moves, a lot of people make mistakes by entering at interesting times, because you could totally enter something on a Friday, like I said, trade through the weekend. I actually used to trade the weekends very heavily, but again, you have to be like aware and managing it. And biggest thing is, I guess, you got to look at the weekly close on Sunday and just kind of keep an eye on that, because a lot of times what will happen is this will be our low for Friday. You'll get a little push up over the weekend. And if you end up taking a position that you're going to just hold, you don't really have a time frame. Like, it's just like, I'm just going to hold it till it gets to this level. My stop loss is below the low. Almost always will begin next week. You come down and you take out last week's low. All right. So again, for somebody who was not patient enough to get a better entry or look at what we have at the beginning of a week or the beginning of a month, that happens a lot. So not sure even how we just got on that tangent, but that was the idea there behind something, maybe behind the if some news release gets dropped today and how it gets unwound by Monday. That was a good one right there. All right. Let's look at some alts. All right. So Solana, Link, Arrow. I haven't looked at Arrow in a little bit. So whatever's on there still is whatever we were looking at last. This is stocks. That's why. Arrow in this top area. Arrow's a newer coin that kind of just popped out. I mean, looking at, I was just about the only the big surprises that have been coming when you start flicking through some charts these days is because of that September or October 10th. Some coins, man, just really had those flash crashes to. I think I looked at Atom. That was probably the most gangster one, was Atom. We're gonna come back to this Arrow chart, and realistically, this only hurt anybody that was on some leverage or had a stop loss or anything like that, right? But if you just bought, and if your positions are just bought and hold, didn't really affect you, aside from, of course, now it's lower than what it was. It's definitely eating that pullback. Where is it? Atom basically went to zero on that liquidation drop. All right, we'll come back to it later. That was probably the worst one I've seen. Everything else had like 70 and 80% drops. And of course it was like a pop right back up. So, it truly was flash crash material where almost nobody could really, you always want to say like, oh, I wish I would have bought there, but like there was no time. All the exchanges were down. There would have been some nice big moves because like things popped back up like 800%. Arrow, sorry. So this was my last setup on Arrow. Just looking at this overall range here, I was going to say that this down 55%, but that's from August. I just wanted to see how well this is on Coinbase. So I don't know if it truly shows everything, but was that the 10th-ish? I just want to see how it held up on that drop. I mean, this is only down 30%, and I say only, but normal correction here, right? If just looking at this is not anything out of the ordinary here. You had a push up from 29 cents to $1.50. So far, just holding a higher low, right at our quarterly average here, and a monthly point of control that it's already been tagged. Like these aren't overly major levels at this moment, but yeah. Just looking at this, where is this from? Just go ahead and merge this now. All right, so we're at the overall point of control here too. So again, just looking at all the volume for this. Right, so you got this huge level coming out right here. So this is a big region. It's also, you see the dotted line here. It's also the middle of your range right now. It's not an ideal area to probably come in and enter. And I only say that because, again, you don't have like the best entries here. I love to look for lows are obviously the best, or like major, gold pockets, which I guess is one where that's sitting at too. So I guess I stand corrected here on this one. I mean, it's still probably not an overly amazing entry. Really, I only say it because it's the middle of the range. That's the only thing that's the only thing that really is throwing me here. But looking at it in the sense of like, if you have 2 or 3 pieces of confluence on why you would look for something to hold support and look for another move higher. I mean, we do have that. You have the gold pocket here, which is the 61 to 65% retrace. We have the point of control of this overall price action from like all the way back in March, middle of the range. Support. I mean, that's not like the best piece, but yeah, I mean, I guess this is like a big support area I would look to hold here. ultimately, though, still just looking up. Got a nice consolidation area here. Really need to get back above 127 for any kind of continued upside. We got the all-time high, of course, here, but the ultimate target area I still could see this run into is this 359 to 440. Just have to be aware here. We're middle of the range, so it's nothing to just drop back down to before we go up. So again, when you're looking at things in the sense of like fresh entries and maybe some longer term, buy and holds, in a position where we are right now, if I was like, I got to get in the arrow, it's down, it is down 55%. So it's not like it's just completely, melted up. But it is still up from the lows of April, and we could see that lower range side about 50 cents. So it's one of those things where you might consider splitting up some buys, right? Maybe get in at this region if it's something you like, and because you want to, have skin in the game in case we rise from here, because we very well could. Like I said, this is structurally where we would see the bounce. Again, this is gold pocket area, right at the high of right at the upside here of the point of control. It's just got to be aware that we could very well just come down to that range. Very normal price action at that point, and then still get that same move. Near, we'll take a look at near, brother. All right, Solana and Link. Hello, I'm longing gold in and out. Won 4 out of 4 in the last 10 days. That's pretty great. From 115%, from plus 100 to 15%. Trying to catch corrections. Open before New York, 1 to 3 hours. What's your take on that? I'm really new. Wonder if it's okay. Being really new and having 4 out of 4 wins in the last 10 days is pretty great for gold, which has been pretty volatile in these last few days here. I don't really trade gold short term, so I don't necessarily know if I'd have the best answer for you there. I mean, I could probably, again, the only thing I truly trade daily is Bitcoin and Ethereum. And the reason behind that is I've just studied these two assets so hard and so long, and been able to like create some back testing. And like, again, today is a CPI day. I just know, because based off the last 30 of them, that it's likely that we take those London highs and lows on Bitcoin. It's not the same for S&P 500 or NASDAQ or these two, right? Like those all made all-time highs. So everything kind of runs a little differently, and you kind of almost have to study these assets a little individually. I could take the same tactics over to it. We're looking for certain entries with the style and the strategy I use, but yeah, the short-term trading is really hard, my friend. And that goes for anybody. I know that everybody out there likes to make it look like trading super easy, and it is not. And I've found it the best way to do it if you're going to actively look for short. And the reason I love to actively trade is because I'm usually waiting for big moves that are going to take months and years at times, right? The big midterm or, mid to long-term plays, or those big swings. And even if you look at Bitcoin for the last week, right, we're trading at 110. Had you entered at 108 as a swing, for example, no leverage or anything like that, it's kind of boring, right? It's only up $2,000. It's up $2,000, but it's not at my target area. If that was to be, a good example of that. So while I'm waiting on these bigger moves, I tend to take these daily moves and these weekly, swings that occur almost always. But again, I've only back tested this and even done this strategy heavily on Bitcoin and Ethereum. Solana, XRP at times, they react pretty well too. But also the other thing for me is I just stick with Bitcoin, because in the altcoin world, you have to watch Bitcoin if you're going to be entering positions on. So if you're going to have to watch anything, I just might as well just trade the one. So I don't know the best way to answer that on your gold trading. Again, short-term trading on gold, if you're 4 out of 4 so far, I mean, whatever you're doing is working to some degree. So I would just say, one of the best things someone ever taught me was to keep a journal, right? And whether that's texting it, typing it out, or actually physically writing. And the reason being behind that is, again, you already have your stats here to some degree. You're looking at this, but when you catch that bad day, write it down and really look at what you did wrong, right? Was it you getting greedy? Was it you being impatient? Did you not wait for whatever the case is, right? And you'll really start to like take emotions out of it when you basically yell at yourself. So anyways, that's be my suggestion there. When golf simulator profits. Golf sim. People have PTSD from Friday. I honestly, the Fridays have been, we do go through so many waves where just things, it used to be Saturday pumps equals Sunday dumps, right? That was a thing for a long time, for years even. And I feel like we don't even get that anymore, very frequently, at least in the altcoins. If anything, like Bitcoin might push up a little here and there, and the alts kind of follow it. But we used to have like 30 and 40% rallies on a weekend out of the altcoins, and then they'd get all erased by Sunday. And then it went from that to Sunday pumps equal Monday dumps, type of thing. And again, that's just based off of just something that we see constantly. And now it's, Fridays have been the moves for some reason, with the news all stacked on top of it. And usually it comes after the market closes. So that's always fun. All right, Solana. Someone asked for Solana and Link. So Solana, to me, this was one and a good example. I kind of hate that the industry has gotten to a point where crypto, at least trading, if anybody mentions the word trade, it's associated with leverage, right? Like nobody, not nobody, but most people don't trade crypto the same way you trade stocks. And the reason being is technically you kind of have to use leverage, especially because of the exchanges that we have now. You don't want to put 25,000 or 10,000, you don't want to have a crazy amount of capital on these exchanges because they could all disappear tomorrow and there's nothing we can do. But the problem at hand is, there's a right way and a wrong way to utilize that. So for me, I do short-term trades, Bitcoin, Ethereum, and I do utilize leverage as well. But my idea is very different than most. Again, instead of having $10,000 on an exchange, I put 5, and basically I treat it like a weekly or a monthly payment system to some degree. And what I do is I'll take that 5,000 and I'll break it up into $2,500 or less trades. But with that being said, I'll put on some leverage to bump it up to equal 25 grand, 30 grand. If you were doing this on Think or Swim and you were trading stocks, generally you have to have like 25,000 to even open a trading account. And with that being said, I look for these 2-3% moves and all this. And granted, with the leverage, it always looks like, oh, you're making 200% gains or whatever the case is. But you have to look at it like you're using 25,000, for example, and you're not making 100%. You're 8 to 10%, 3%. You have to look at it like that and manage it accordingly. Because I think everybody comes in with $1,000 and they just want to 5x that $1,000. They don't think about it as they're coming in. They're throwing 20x on it. It's technically 20,000, and they're going to lose 300 of it, and that's X. It's not really properly done, I think. And unfortunately, that's where the industry, I feel like, is really heavy right now because we kind of all have to use leverage. It's not because we all just want to degen. There's just no proper avenues besides using like Coinbase futures, and the futures market's just annoying to me. I hate a market that closes. I'll be honest, but I hate remembering having to make moves and what have you. But and then you miss the weekend moves half the time. But Solana had a big move, and that was all to be said because I did not trade Solana with leverage on this play. This was a very big setup that I had given in the Discord months in advance or weeks in advance, at least at this point. We were looking for this move down to, again, sub $100. At the time, this was an NPOC, which is a untapped volume level that was left from this period back here. We had just taken the high, the all-time high at that, the previous like 2021 highs pretty much. And what a fake out to be had, right? So again, anybody that was looking at this at the time was probably extremely excited because it was breaking the all-time highs. And, at that point it was January of this year, inauguration day to be exact. And everything seemed like it would just go up from there. Right. But yeah, when we did that, I was looking for the shark. So again, you got a nice shark out of this, which is the number one harmonic setup because, again, you take out the highs. Okay. Next thing you do, you come all the way down, you take out the lows. All right. So you get everybody jacked up on emotion. Breakout traders, everybody expecting, big all-time high price discovery run, only to get that completely ripped away. Everybody down here is more than likely, if you had long positions or if you bought or anything like that, this is a big stop out area as well as a big emotional area, because now you're coming all the way back down and structurally you're making new lows and break below $100 and all the things. It just sets up everybody for a big emotional roller coaster. But this was the setup we were looking for. This area, I decided to buy it on spot. And again, because the altcoins, I just don't think you need leverage. So for the altcoins, I just make moves in spot, and they do pretty well without any kind of leverage activity. And then you don't lose sleep over it, and you don't risk liquidations and getting immediately stopped out. And at least that's how I do it. Some people have better success with trading the alts on leverage, and by all means, that's great. But this is how I do it. So I like to trade Bitcoin and ETH with the smaller leverage and the smaller moves. Basically aim to make some profits on those, park that into USDC or USDT until big red days. And then I deploy that into longer term positions. And that's my system. I just do it over and over and over and over and over again if I can. And so Sol, big buys right here at like $99. First target was 196. So nice 100% move off the rip. And then from here, and these targets are basically derived off of this harmonic setup. So 196 still plays a role here, but the fact that we are not above it anymore is not great, just at least locally. So what I'd be looking for here is I'd really want to see Solana get back above 196 on like daily closing. This is a daily chart right here. So the fact that we've lost it and we've spent a lot of time below it, it's not a great sign. Just short term, because that means more than anything we probably actually pull back again. And let's just see where like a local gold pocket is at this point. It's actually where we're sitting at. So right between where we are now, we really want to hold that 170. Otherwise, I think 150 is probably back on the table. But for me, I'm already in from lower. So again, there's times when who I'm talking to depends on when you entered, what you're looking for, what's your strategy, your system, your time frame. For me, I'm already in from lower. Even if we pull back to 150, I'm still up 50% from, it's not going to really affect me. Somebody that's looking to buy fresh today, you gotta manage this a little bit, right? Because now it's like, all right, again, this setup I have at play here is a really big setup, and I still foresee a world where we run up to the next two targets. Problem is, do we go to 150 first? Okay. So where we are exactly today, to me, I don't care. I'm sleeping easy. I've already taken profit even at that target one back when we hit it originally back here. But for somebody looking to get in fresh, this is the dance we got, right? Because 150 areas where I'm looking to potentially, that's like a 20% drop if we get it. So it's one of those things like, can you stomach that? Or can you split up your buys potentially? If you're looking to even be a buyer, right? Again, maybe the market is topped and, this thing just goes to zero is another thing you have to consider at this point. But yeah, for me, I'd look for the 196 is my next major confirmation again to get back above. And then I'm looking for 275 basically and 323. And that's where I personally will look to completely exit. Don't even care if Solana goes to 700 from there. Like that's how I manage myself at least. So that would be, effectively a 200% move. Maybe it takes a year to do it. Again, those are incredible moves on some longer term positions. Even though I know that in this crypto world, like everybody wants the 50Xs and the 10Xs, but with the evolution of this market, I think that I'd take the smaller moves if you get them right, especially because of the amount of time they're taking. Any day we're always at risk of those flash crashes again. So that's how I'd look at it here. Person that's buying and trading gold says they might just be getting extremely lucky. And you might. That's a really good win rate there. And just in general, just to be able to get in there and get out. I mean, that's a lot of people can't do that, especially being new. So congrats to you, my friend. If you DCA into any of these larger caps, it's a decent entry point. Yeah, I mean, again, like one of the biggest things for me is just that I'm always looking for the best entry if possible. Who isn't, right? Thing that I do that most don't is I'm really patient for that. And if I don't get it, then I don't get it. And I just look at another opportunity if there is one. I don't care about the project, the coin. I don't get married to XRP, Litecoin, whatever the community is based around it. And, but at the same time, even back to the beginning of this show today, we were looking at the stock market, that we were at levels that are so crazy that even if you pull back 50, 30%, and yes, long-term wise, whatever, you just got to be aware that even if we get some decent entries and short to like whatever, to me, I guess my long-term outlook, the biggest piece I just want to put out there, again, my strategy, you can obviously do with that information what you want. I'm not looking at anything past 2027, 2028-ish. As far as long-term right now, I fully anticipate we will have an opportunity where the markets will sizably correct in that window. So for me, I'm actually looking to heavily scale out of a lot of things. And one of two things is going to happen. Either the market won't pull back and I'll just be sitting in cash from the last 8 years, basically, of managing this along the way. Or it does, right? And it pulls back sizably. So for me, I usually would look to sell out of, like I said, I'm going to look to get out of Solana if we push up to this region. And then usually I would just look for a 50% pullback and I'd re-enter. This is the one time since I've been in, investing with crypto, at least, that I won't be looking to like rebuy a lot of things. Bitcoin and ETH are the only two that I really, have my attention as far as like a play that if we do get a sizable market correction in the next few years, I don't even think it's going to be ETH. I think it's Bitcoin, really, that is probably going to take the role of gold, the way that gold took, 2008 to 2012 in the last financial crisis. Gold was the one asset that actually doubled its market cap during that time. I can see Bitcoin being that asset this time, and maybe even gold does it again. But that's just kind of how I'm playing that. Going to the answer, or going back to the comment of like, if you DCA any of the large caps, it's a good area now. And again, I don't disagree that. It's just even Solana looking at this, yes, we're down 30%, or we're at 25%. Always a great time to look for an entry, a DCA area for these larger caps. I'm always looking for 20 to 30% pullbacks versus trying to buy at the highs where everybody else is actually wanting, to get involved, because it feels like it won't stop and you don't want to miss it. The only other part of that is you still got to look back and realize, all right, I'm coming in now where this is still up 96% from just April. And then, of course, we're up also 2022. So not even 3 years, you're up 2,300% in less than 3 years. So it's just kind of the whole case of being able to zoom out a little bit, risk management. And I think it's just the strategy, right? So I have a strategy that I'm utilizing, and I think that that's where most people fail. They don't really plan out things, and they don't really see the big negative potential sometimes. Like, not saying that this has big negative potential, but again, I'm coming into a position, if I'm looking to buy fresh today, I'm buying something that's up 23x in the last 3 years. So it's risky, right? So that's just the only thing I'm putting out there. Still could go higher. I still see this going to 273, 300. That's not a huge move, though, from where we are now. That's only 40, 70% from where we are now. So in theory, you're looking at catching maybe 70% here, as far as more probable at the moment, against something that's up 23x. So it's like you're coming in at a place where it's up heavily. That's the only thing I just put out there. So it's just a cautionary, thing behind it. Doesn't mean it's not going to go up. Doesn't mean we can't see, stupid gains from here. It's just like when I'm looking at Sol and being like, am I going to long-term invest right here? I could totally look back in 10 years and say, man, what an idiot. I should have. But from where we are right this moment, I can't do it like that. So hey, now I've been making a living for the past week trading one Bitcoin back and forth. I'm cool with the predictable chop. Yeah, again, like I said, the ranges are incredible. I actually love a range on Bitcoin. I know that most people do not, but again, that's where the short term plays really come into to effect, because we could look at all of this just from the last week, and there was pretty much a daily setup all around it, right? So today was an easy one. Again, like I said, London session highs, previous day high, CPI news, almost a guarantee we were going to sweep it and drop down to this 109 area. All right. Then we start off the week. Okay. Start the week off. Ideally you come down and you take the low, but where we were, more than likely we were going to make our way to the point of control. All right. That was on Monday here, right? Monday comes up, boom, you come up to old T-Bone's quarterly open a little higher, get the pullback. And then from there, you just give it all right back up. After that, you had Monday low sitting right here. So this is on Tuesday. You sweep Monday low and go. Like it's just back and forth all day, every day. But the cool thing is that each and every day of this market is different. Like I said before, I don't at least trade Friday the same way I would trade Monday. All right. We have new averages, you have new weekly targets, you have new daily targets. There's so much that comes into play. And, you can make, if you have a strategy behind it, it's not that simple by any means. But while we have this just sideways chop, I mean, we are nowhere we have not been since the 10th. So 2 weeks, we've essentially just been flopping and groping. It's like somebody's name on Twitter. I don't know. It's always funny when I hear it. 2 weeks, we've just been going sideways here, just going absolutely polished to the walls, and had to slide that in. And yeah, like I said, there's definitely there's moves to be had. And again, next week you'll have another one, and we are coming into a new month here in a second, so you'll have a new monthly move. I mean, it's fun. I actually really enjoy the ranges. I feel like one of the few people that can speak to some of the more shorter term moves a lot. The bigger stuff is easy to me too. And I say easy to talk on, because, we have some higher time frame projections. One of which for me at least was a big one that we had to wait, obviously the whole bull run for. But this is one that, like, when I made a year and a half ago, right? So this was the setup at hand when we were trading into this region here. And I bring this up because it's like, all right, these are the big setups. When we were trading right here in September, I made a couple of public videos. Even we were trading into the gold pocket in time. That usually leads to the next leg up, and the target area was right into here, and it was the summer of this year. Was the true blue target area, and it was 122 to 143. All right. Now, locally, when we had the smaller version of this, because I showed you one of these also that we started off back here at the carry trade low, that potentially took us like 130. But either way, this was the overall target that was looking for September of 2024. Well, before that even, but September 2024 is when we were really looking for this to churn up a bit. But to wait for that, there's so much that happened in between. And what was this move? I mean, it was a 120% move, which is amazing. But in that, all this right here, I mean, this was, when you look back and you're just like, oh yeah, we were here a year ago and now we're here. But if you remember all this, I mean, this was some big moves and some big opportunities. This one right here, like I said, the carry trade low was good. There was a bullish butterfly that came out of that took us up to the new highs. Then we got to inauguration time where we had the bearish shark, right? So I hate the word called, but noted it to pretty much the day that we were going to put in a high right on that 19th or 20th region. And then we were coming back down at 80K, which we, came a little lower at the time. But again, being able to note that when we're at the high is the key. And then from there, noted that we swept the low here. And what we do here, you put in another shark on the way up. That one actually didn't play out as far as target wise go, which was fine. But yeah, I guess I'm highlighting that even if, we're looking at the big time frame stuff, for me, I still anticipate Bitcoin to go higher, but in that realm of getting there, we might mess around with some ranging, a little slowed down and then back up. And there's a lot of opportunity to be had in the middle there. And even if you're just, big thing I always like to say too is that even if you're just aware of it and not trying to trade it actively, I always actually would suggest most people to not actively trade. Um, it takes some time. It's like anything. You're not just going to come in and, I can give signals till I'm blue in the face, but some people are still not going to, they're going to go crazy on it. They're going to get stopped out early, or they're going to get emotional with it, and then they're going to revenge trade and all these things. And if anything, it's more so to just be able to say, hey, there's a big reason that we're probably going to see a pullback to this level, like mentally kind of get prepared for it. And then when the news comes out, I don't know, it's just different. Again, like I don't feel like I'm ever shocked or phased with any of this, any of these moves. I'm never like frantically like, oh my God, what's going on? What news just broke out? There's almost always, a technical reason behind it. There's never really a random spot for the chart to come down to. Yeah. So anyways, that's how I view it there. Bitcoin forming another Darth Maul candle. Yeah, so Bitcoin is, again, today we had a setup. Got to zoom in pretty big here, huh? Got a setup for us to come back down to this level, right? So that's just our daily targets for the day, which is like 109 to just 109 region. You front ran it on that run up or the first drop, but probably making our way down to it now. And again, this is just a mean reversion at the end of the day too. This is our average from yesterday, and then a volume target, both likely to be met in the following day, which these are both from yesterday. So this is like today's daily targets is how I get that essentially. So I still think we're going back up. Yeah, again, $97,000 Bitcoin. I think we're going to slowly range around for the next few weeks and get down to that region. And that's the level for me that I guess if we start to lose that, I'd get more bearish here that we could go lower. But coming down to 97, 98, 96, I don't see why we wouldn't continue up from there actually. And I think, like I said, I think it would go against, and I covered this pretty heavily in the beginning of the video. So if you want to rewind it or catch it in the beginning, the reasons why that I look at that level and that idea set. But between now and like really it could be March, I think we might be ranging for Bitcoin here, because we did again come into some big time frames and some big target areas. So a lot of times you get these huge impulses, you got to take some time to unwind them. And best part is that it gets everybody emotional on every pop and every drop, right? Because everybody gets really aggressive into one way or the other. And imagine if we drop down below 100K, the chaos that would ensue, and everybody would be like, bear market guaranteed, see you at 20K. And maybe they're right. I just, at the moment, that's just not what I'm prepared for here. So 97 is a big one. If we start losing that, then, I'll have to change my tune. But until then, yeah. Bearish on a day trade, bullish on the midterm. Yeah, like I said, I don't know if that means you're just saying like you're bearish today, but bullish midterm, which I get that. Coca-Cola says, get wrecked. Sounds good. Corazon, I know it could go either way, but you think an ETH 5K is likely before the Bitcoin dump, or 98K or after? Yeah, so for ETH, let's take a peek here. So Bitcoin just ranging. ETH is pretty much doing the same here too. We came back down to our yearly open on that little wick down earlier this month. And at the time we had an untapped average down here as well. So just like we're heading down for that little daily one, I just pointed out the average of price from yesterday. This was an average from a month right here. And this was untapped on top of the yearly open. We front ran it all the way down here and left it. So back we come. As long as we're holding above this level here, specifically because of the yearly open, not because of the average there, I don't see why we wouldn't actually make another move towards the high here on ETH, but that's where things get a little different. Okay. So coming down and losing that would not be great. But until then, I drew this up because I just pointed out that some people will probably be looking at this little triangle here, which technically would be bearish. It's a symmetrical triangle, which usually actually has a 50-50 chance of either way. So it's a pretty pointless setup unless you're just paying attention for a little, climax here. But usually when you enter something like this from the high side, you continue down. So I assume that most will be looking at that in that form. Usually actually sets up a little fake out and then you get a little push up. So either way, we're consolidating here for a bit, ranging around, getting everybody, again, the emotions are high. To answer your question, I lean more that we'll see the 5K for ETH before, even if Bitcoin does pull down to the 98. And what I mean by that is obviously if Bitcoin drops, ETH will drop too. But if Bitcoin stalls out or pushes up for a little bit, ETH may push up. You get a pullback out of Bitcoin, you come down, you get a stall again, ETH may push up, right? It doesn't necessarily have to mean all in one day. Again, I picture Bitcoin to be ranging for weeks here, potentially even a month or two or a couple months. So in that time frame, even though there's going to be ups and downs, the altcoins actually may see some upside here. So yes, to answer your question, I think that we have a chance to see 5K ETH before Bitcoin hits 98K or below. Oh, we are already past an hour. All right, folks. Coca-Cola, I know you are. Is that a cigarette and a pumpkin? My friend's hitting a dart in a pumpkin iced coffee. All right, let's see some questions here, and then we'll probably wrap it up here, folks. Someone says, I think this is how the bear market plays out. Basically, old hands changing out to institutions. Retail likes the volatility. BTC is not going to do what people expect anymore. It will trade in range. Yeah. I tend to agree with that. And again, like I said, one of the big pieces for me is that also like looking at if there is a cycle out there, it's not necessarily the 4-year cycle I'm paying attention for here. It's the 20-year cycle that I think that Bitcoin's putting in the first 20-year cycle alongside the housing market, the business cycle, however you want to place it. And that time frame for the end of that 20-year window all aligns with 2027, 2028, 2029. It's also the 100-year Great Depression, cyclical inversion. Like all these things like really line up with these next few years here. The fact that gold is breaking out the way it's breaking out is kind of an indication of things that come probably in the next like 12 to 24 months. But yeah. They said, nice try. Nice. Thank you. Yeah. That's probably all I'm going to do here, folks. So I really enjoyed the hour we had as always. If you're interested in joining the Discord and getting access to Nicholas Merton's monthly dash report, check us out over at data-pro.com. Aside from that, we'll see you all next week. Hope you all enjoy the rest of your weekend, and I'll see you on the next one. Until then, everybody.